Will car subscriptions replace traditional car buying by 2030? It might sound futuristic, but this shift is already happening. Imagine getting a car without dealing with loans, paperwork, or unexpected repair bills. Just one monthly fee, and you're on the road. That's the promise of car subscriptions. In this video, we're diving into what they are, why they're growing so fast, the benefits and drawbacks, and whether they might truly replace car ownership in the next 5 years. Let's get into it. Car subscriptions are kind of like Netflix, but for cars. You don't buy the car, you don't even lease it, you subscribe to it. You pay one flat monthly fee, and that fee usually covers everything. The car, insurance, registration, maintenance, and even roadside assistance. Many services also let you swap cars, so you could drive an SUV in the winter and a convertible in the summer. No big down payment, no long-term contract, no surprise repair costs. It's just easy. Now, here's what's wild. Back in 2024, the global car subscription market was worth around $6 billion. By 2030, it's expected to grow to between $27 and $50 billion. That's massive. In the US and Europe, experts predict that up to 20% of new car transactions could be through subscription models by the end of this decade, and automakers know it. Volvo, BMW, Toyota, Hyundai, even rental giants like Hertz and Sixt have already launched or tested subscription platforms. So, what makes car subscriptions so appealing? First, they're convenient. Everything is bundled into one monthly payment. You don't have to worry about insurance quotes or unexpected repair bills. Second, they're flexible. Need a different type of vehicle next month? Just swap it. Done. Third, they're predictable. You know exactly what you're paying each month. That makes budgeting way easier. And finally, they're digital. Most services let you do everything from your phone. No dealerships, no paperwork, no pressure. Who's signing up for these services? Mostly younger drivers, millennials, and Gen Z. According to recent surveys, almost half of drivers under 40 say they'd rather subscribe than buy. Compare that to baby boomers. Only around 20% of them are open to subscriptions. These services are also growing in popularity with delivery drivers, rideshare workers, and short-term business travelers. Even in countries like Germany, India, and South Korea, car subscription models are seeing real momentum. But they're not perfect. For one, they can be more expensive month to month than buying or leasing. You also might not get the exact car you want. These are usually fleet vehicles, so options can be limited. There may be mileage caps or extra fees if you cancel early. And let's be honest, some people just love owning their car. They want to customize it, care for it, and maybe even pass it down someday. Subscriptions can't offer that. Still, car makers love subscriptions. Instead of a one-time sale, they earn steady monthly revenue. They also get something even more valuable: data. They can track how you use the car, when you drive, what features you use, and more. That helps them improve their products and market smarter. Plus, subscriptions make it easier for people to try electric vehicles without the long-term commitment. It lowers the barrier for EV adoption. So, will car subscriptions fully replace buying by 2030? Not completely, but they'll definitely grow and become a major part of how people access cars. Think of it like streaming TV. You still have DVDs and people still go to movie theaters, but streaming changed everything. By 2030, car buying, leasing, and subscribing will all be normal options, each with pros and cons. Subscriptions won't kill ownership, but they'll compete with it. So now it's your turn. Would you subscribe to a car instead of buying one? Let us know in the comments below. And if you enjoyed this breakdown, be sure to like, subscribe, and hit the bell for more content about the future of cars. Thanks for watching.